Welcome to Charts Today. My name's David Linton, and today I'm just looking at the markets after yesterday's big falls. And when you get a day like yesterday, which is a real bloodbath in markets, a lot of markets were off for their biggest levels in 4 years, and so we've seen that big fall. And so it's nearly always, and from a technical point of view, it's what happens next that really counts. So let's just have a look at that this morning, thinking about what we now need to watch for, having had those falls yesterday. So the dollar is still looking very bullish. It has fallen back these last few days, which you've seen, but the long-term position, the dollar is still a bullish one. We are on a little bit of a uncertainty on the long-term chart. We've got a downside and an upside target, but on these charts, and remembering this is my long-term, my medium-term, and my short-term picture. Here I'm running on Thomson Reuters icon, could be Bloomberg, could be anything. Updata runs on lots of different data services. We look at the euro, we're seeing that is looking long-term bearish against the dollar. So, but again, we've had a little bit of a reprieve short-term. So we are seeing a little bit of a relief rally here, about 1% upside potential on the short-term chart. We're having met the target, but we have got these medium and long-term targets hanging over us. So the outlook for the year is still bullish dollar, bearish euro. Of course, we saw the Japanese yen do the massive breakout last week. This week we're falling back. So we saw that big jump last week. We are just coming back, and that's put the dollar yen chart back into short-term bearish. So the dollar just giving up some of that gain against the yen. Watch for these targets being activated. Looking at sterling, we've seen that sterling is actually looking a bit stronger this morning. We're back to short-term bullish, that dollar weakness helping. And against the euro, sterling also looking a little bit stronger this morning. We're just seeing these charts transitioning on the short-term chart, looking more bullish than the euro. Taking a look at some of the other markets, Bitcoin still sitting below that $10,000 level, but long term, Bitcoin is going through a recovery, but short term we are just looking a little bit bearish there. So stock markets, we saw the S&P down a massive 3.35% yesterday. That's put us into short-term bearish mode. The most important thing now is what happens next. So we're looking for, will we hold this low? Was that the low, or will we recover and then go lower? And that's what we have to worry about, is the lower low. So is this the floor, or are we going to go lower? And the same is true on the Nasdaq, of course. And really, we saw the Dow also down 3.5%. The Nasdaq was down nearly 4%. So the big thing today to watch out for, and indeed this week, is how we recover from here. We're not likely to just bounce back this 3%, but it is worth remembering that stock markets in the US are still looking pretty bullish. The Russell 2000 index is the one market, the broader base index, that is struggling to take out the 2018 high. So that has still been a little bit of a worry on breadth grounds. Looking at the futures, we're seeing the S&P future up 0.2% this morning, and the Nasdaq E-mini up 0.4%. So what we really need to watch for in the futures is any signs of these lows yesterday being taken out. And the risk is always now, are we going to recover a little bit, go lower, or can we get back and make new highs? That will be the real test. Already the European markets are not looking great this morning. FTSE 100 is trading lower, the 250 is trading lower, the Xetra DAX is down 1/3%. Italian coronavirus is really just a worry there for European markets, and we are seeing the CAC 40 down a further 0.5%. So despite the fact that the futures are showing a flat opening in the US, we are just seeing that falling away. Tokyo was down heavily, down 3% overnight. It was closed on Monday, so it was just playing catch up with the other markets. And again, this is now starting to look bearish on this chart with the lagging line falling through on the daily. So not a great looking market. And again, we never managed to break higher than the 2018 high. The Hang Seng was up 1/3% after its big falls on Monday, and the Shanghai Composite really saw its first fall that we've seen for a while here. So we just did see a little bit of a move lower there on the composite. So it will be interesting to see whether we can actually hold these levels. But the Chinese market, of course, being propped up by the government at the moment, but we still do have these very big long-term targets hanging over us in the Chinese market. So one to watch. India was down a further 0.2%, so after a big fall on Monday, it fell further on Tuesday, and the Aussie market, being resource heavy, fell even further on Tuesday, so by far not a given. The biggest faller by far on Monday was crude oil, and Brent crude fell some 4 or 5%, and we're just seeing a slight relief of 0.1%. So it's really clear that that picture is not changing very dramatically. And the thing to worry about for crude is, will we, on Brent crude, will we take out this 53 level that we saw earlier in February? So that's the level to watch. We're seeing this short-term chart yesterday just falling away. We've come back a little bit, recovered a bit at the end of the day, but will we make lower lows? We've still got a downside target of 3% hanging over us. And of course, if we break lower, anyone who's seen my weekly report, if we break lower and make new lows, that activates very big downside targets to the low 30s. WTI, similar picture. It's down slightly this morning. It recovered a little bit at the end of yesterday, but is falling away. And US nat gas also sitting at that 183 level, but looking bearish on all three time frames. And we've got targets to just below 170, some 7-8% lower. So the recovery not really looking likely there. The big beneficiary yesterday was gold. Gold looking incredibly bullish on all three time frames. We gave up a bit yesterday, and we're just seeing here on the 60-minute chart, we've got a potential 3% downside, but we've got very big upside targets still to play for. These long-term targets now being very close to met. This column will generate a new one that's currently projecting to $2,200 for gold, so very significant there. The other big one yesterday was US 10-year yields. They were collapsing, and we took out the low that we saw earlier in February down to as low as 1.35%. So the outlook for US interest rates is now lower, and we also saw the German bond then rocketing as a result of that. So quite interesting there. Just a quick look at European energy markets. We look at coal first of all. Coal is up slightly, but the chart for coal is still pretty dire. We're in a very clear downtrend with downside targets here on coal. So it's very hard to be bullish on the coal chart. We're seeing emissions down a further 0.7%. They're giving up that great run we saw earlier in the month and moving back into short-term bearish territory. You need to look at the 1-minute charts here for targets. MBP fared better than most yesterday, but it's down 0.45%. That 20p level that we hit on MBP looking like it will come under threat. And TTF down a further 1% this morning. It's just a one-way bet for European gas at the moment. So we're back below the 9 level. That's really quite key. And this level that we saw breaking out, we're now back into that. We've got 882, a further 1% downside there. So, and then of course 706 is the long-term target, a further 20% downside. So not looking great. Taking a look at German power, down very slightly this morning, but again really giving up the ghost and really looking like this 40 level could come under pressure. We've got a target to 37. We said at the start of the quarter, in fact in our Christmas report, we said watch for German power having a 3 in front of it, and that's still looking pretty likely indeed. So just one to watch. We are seeing some of the other power markets recovering a little bit, but overall the whole energy mix is being dragged down lower. That's it for now. Just keep an eye on what markets do next. It may not happen today, but sometime this week we're either going to get a good feel for whether it's a recovery off this low or whether this is just a failed recovery and we're going to go lower still. It's not looking good for a lot of the energy mix. Bye for now.